Welcome to the deep dive. Okay, here's something wild to kick us off. Think about the economy right now. Everyone's watching their spending, right?
Yeah, definitely seeing that across the board.
Well, one big quick service player just had its biggest quarter ever for opening new restaurants.
Wow, really? In this climate?
Exactly. While everyone's talking uncertainty, these guys are expanding like crazy. We're talking people lining up, even in the rain, apparently, just to get their hands on the product.
That's pretty incredible. Speaks volumes about demand, doesn't it? And their business model's resilience.
Couldn't agree more. And that's exactly what we're digging into today. Wingstop's fiscal second quarter 2025 earnings call and all the reports about it.
All right, let's get into it.
Our mission here is to really unearth the key stuff, the strategies, the performance highlights, the insights from these latest reports. Basically, get you up to speed fast on this company that's really serving the world flavor.
Sounds good. Where do we start?
Okay, let's kick off with the big picture. Get a sense of their overall resilience and this pretty remarkable growth we're seeing.
Right.
So the headline numbers for Q2 2025, they look really solid on the surface. System-wide sales jumped 13.9%.
13.9%, yeah, to $1.3 billion. That's a strong top line.
Definitely. But then you dig a bit and you see domestic same-store sales actually dip slightly, down 1.9%.
Right, and that might make you pause, but context is absolutely everything here.
Explain that. What's the context?
Well, this isn't weakness. Not really. It's more about what they were comparing against. They were lapping these absolute massive comps from the previous years. Think 28.7% growth in 2024.
28.7.
And 16.8% in 2023.
Yeah.
Mostly driven by more people coming in, the transactions. So that 1.9% dip is on top of huge multi-year gains.
Okay, that completely reframes it. So it's less a dip, more like leveling off after a massive climb.
Precisely. But the really eye-popping thing is the unit growth, the expansion.
Yeah, tell me about that. Reaching new heights, is that right?
Unbelievably so. They opened 129 net new restaurants globally in Q2 alone.
129 net.
And that's not just a lot. That is the most they have ever opened in a single quarter in their entire history.
Wow.
It's this unprecedented pace. We're talking a nearly 20% growth rate. Year to date for 2025, that's 255 net new units.
Which is, how does that compare?
That's already the same number they opened in all of 2023.
Just halfway through the year.
Exactly. And they've bumped up their guidance for the full year now, expecting 17% to 18% global unit growth. That means somewhere between 435 and 460 net new restaurants in 2025.
That's aggressive. Who's opening all these new franchisees?
That's maybe the most telling part. Over 95% of these openings, they're from existing brand partners,
Yeah.
people already in the system choosing to reinvest.
Okay, hold on. Let's break that down for you listening. The sources mentioned these really strong unit economics. Over 70% unlevered cash-on-cash returns.
Right. At current average unit volumes, or AUVs, around $2.1 million.
Yeah.
And the build-out cost is relatively low, like $500,000.
So that's 70% return, unlevered. That means for every dollar a franchise invests without debt, they're getting 70 cents back really quickly.
Yeah, it's incredibly attractive. Makes reinvestment almost a no-brainer.
Which totally explains why existing partners are doubling down, fueling this crazy expansion. It's a massive vote of confidence.
Absolutely. From the people who know the business inside out.
So with all this growth, how are they feeling about, the broader economy? People are worried. Are they seeing any impact?
Leadership definitely acknowledges it. They hear the concerns, prices, jobs, just general anxiety.
Right.
But they say they're staying focused on their strategy. Fundamentals are strong, they report. Brand health, ops, digital, the unit economics we just talked about,
Yeah.
all solid.
Any specific areas they're watching?
They did mention seeing some softness in certain pockets, areas that over-index or have a higher concentration of lower-income Hispanic consumers.
Okay.
But they seem to view this as temporary, something that should normalize.
Right. So fundamentals strong, keeping the eye on the ball despite the noise. Let's talk about how they're managing this growth, especially operationally. This Wingstop Smart Kitchen sounds like a big deal.
Oh, absolutely is. They're calling it a game changer, and honestly, the results seem to back that up for guests and their own teams.
What kind of scale are we talking? Is this just a pilot?
No, it's already live in 1,000 U.S. restaurants. It's 1,000.
Wow. And the plan?
Full system implementation by the end of this year, 2025.
Okay, so what does it actually do? What are the improvements?
The big one is speed. Initial markets are showing average ticket times cut by 40%.
40%. So what does that mean in minutes?
It means getting orders out in about 10 minutes.
Yep.
Down from, maybe 18, 22 minutes quoted time before. Even on their best days,
10 minutes versus potentially over 20, that's massive, especially for lunch or quick dinners.
Huge difference, and it flows through to other things. Faster speed, obviously. Yeah. More consistent experience for the guest.
And does it impact sales?
Apparently, yes. They pointed to the Dallas-Fort Worth market. Smart kitchen restaurants there are seeing meaningfully higher same-store sales growth compared to control restaurants.
Okay.
And get this, that's without extra advertising pushing it. The speed itself seems to be driving sales.
Interesting. Any impact on customer happiness?
Yep. Guest satisfaction scores are about 8 points higher in those smart kitchen locations.
8 points is significant in satisfaction metrics. So faster, happier customers, better sales. What about delivery? That's always been a bit of a weight with Wingstop historically.
Exactly. So this gets really interesting. Like you said, delivery times could easily push past 40 minutes before.
Yeah, I remember that, which takes them out of the running if you want something quick.
Right. If you're filtering on DoorDash or Uber Eats for fastest near you, Wingstop might not have even shown up.
But now,
With the Smart Kitchen,
now they're unlocking delivery times under 30 minutes on those marketplaces. That's a total game changer for accessibility.
so they're suddenly competing in that fast delivery
Yeah.
category. Precisely. And the numbers are showing it. Back to that DFW market example, year over year, sales growth and delivery there is outpacing the U.S. average growth by mid-single digits.
Wow. So the kitchen tech is directly fueling delivery growth?
And it connects right back to their big long-term goal.
Yeah.
Scaling those average unit volumes, AUVs, up to $3 million. The speed is a key enabler for that.
Okay, so operations are getting a massive tech boost. Let's shift gears a bit. What about what they're actually selling and how they're reaching people? Menu innovation.
Yeah, they highlighted the relaunched crispy chicken tenders. Those came back in Q1 this year.
And how are those doing?
Quickly becoming a fan favorite, is the quote. Seems like they're hitting the mark.
What's the strategic angle there? Just another menu item.
More than that, they're seeing really strong engagement, especially with new guests coming in for the tenders. And those new guests, they're sticking around, higher retention. Good satisfaction scores, too.
So it's bringing new people in and keeping them.
Exactly. And here's a killer stat. The number of new and reactivated guests, people coming back after a while, has tripled since the tenders launched, compared to the run rate in 2024.
Tripled. That's huge for customer acquisition and re-engagement.
Definitely. It's all part of their goal to grab what they call a fair share of the chicken tender market, which is massive, like $1.6 billion annually in servings.
Okay, tenders are working. What about the digital side? They launched their own tech stack, right? My Wingstop.
Yep, that's been live for about a year now.
And the impact.
It's all about the data. Using it for personalized content, segmenting guests better, making offers more relevant.
Is the database growing?
Significantly. Up 30%, they said. Now close to 60 million people in it.
60 million. That's a serious asset.
Huge. And it sets them up perfectly for their next big digital push, a loyalty program.
Ah, loyalty. When's that coming?
They're piloting it in Q4 this year with a full system-wide launch planned for 2026.
What's the goal? Just points for wings.
They're aiming higher, strengthening engagement, driving repeat visits, sure, but also building more of an emotional connection, hinting at unique rewards that go beyond just transactional discounts.
Interesting. And digital's already a huge part of their business, isn't it?
Massive. Digital sales were 72.2% of system-wide sales in the quarter.
Over 70%. Incredible. Okay, so great food, smart tech. How are they getting the word out? Amplifying the brand.
Big partnerships seem key. They talked a lot about the NBA.
Right, playoff sponsorship.
Yeah, in-game placements, presenting sponsor for the second round, getting the brand in front of a lot of eyeballs.
Makes sense. Any others?
They mentioned leaning into partnerships with WWE and UFC too.
Okay, targeting specific fan bases that align with theirs.
Exactly. Reaching new audiences that fit the Wingstop profile.
Yeah.
And they're not letting up. Q4 is planned to have their highest media investment of the year. So continued focus on awareness.
Got it. All right, let's talk financials and the global picture. With all this expansion and investment, how's the bottom line looking? Financial health.
Pretty solid, actually. Q2 revenue hit $174.3 million. That's up 12% year over year.
And profitability.
Adjusted EBITDA, that's a good measure of operational profit, was up 14.3% to $59.2 million.
Nice growth there, too. What about costs? Managing those okay?
Seems like it. Cost of sales as a percentage actually went down slightly to 75.2% of company-owned sales, mainly from leveraging labor and operating costs better as sales grow.
Anything specific driving that?
Well, food costs saw a bit of pressure from more people ordering bone-in wings, which have a higher food cost percentage. But the actual cost of bone-in wings dropped 6% compared to last year.
Okay, so commodity costs cooperating a bit there.
Yeah, and system average food costs are holding steady around 34%, which is right where they want at mid-30s. On the labor side, they got benefits from refranchising their New York market stores and also introducing frozen fries.
Frozen fries, how does that help labor?
Less prep time needed compared to fresh-cut fries. Frees up team members.
Ah, makes sense. So financially sound, managing costs. What about returning value to shareholders?
Definitely a focus. The board just upped the quarterly dividend
Mhm.
from $20.27 to 30 cents per share, payable in September.
30 cents a share. Nice bump.
And they still have their share repurchase program active.
Yeah.
About $191 million left authorized as of the end of June. So dividends and buybacks, both in play.
Okay, now the part that sounded really exciting earlier, international. You mentioned fans lining up in the rain.
Yeah, that was Sydney, Australia. Their first restaurant opened there. Huge lines, pouring rain. Didn't matter.
Wow. Any other examples?
Paris, too. First flagship opened, same thing, big lines. They built momentum from an event they did during the Olympics last year, the House of Flavor.
So the demand is definitely there internationally.
Oh, yeah. First half results internationally were strong. And here's the kicker. New international markets. They're opening at sales levels higher than the domestic AUVs.
Opening stronger than established U.S. stores. That's impressive.
It really is. Shows powerful early adoption. And just recently, a new UK restaurant broke the record for the highest global weekly sales, a record that Kuwait had just set.
Records falling internationally. Are they adding more countries?
They are. Just signed deals for Italy and the Netherlands. First stores set to open in both countries this year.
Italy and the Netherlands? Wow, the global push is real. So bringing it all together, what's the outlook, especially given that slight domestic dip in Q2?
They reiterated their guidance for the full year 2025, still expecting about 1% domestic same-store sales growth.
So they expect things to pick back up.
Yeah, the expectation is that sales growth will return as Q3 progresses, and especially as those really tough comparisons from last year start to ease up later in the year.
Makes sense. And the long-term vision.
Still firmly locked on that $3 million AUV target. And the big, ambitious goal, become a top 10 global restaurant brand.
Okay, so wrapping this up for you listening, what does it all mean? Wingstop's Q2 really shows a company firing on, well, maybe not all cylinders domestically this quarter, but the engine is incredibly strong.
Right. They're using tech like the Smart Kitchen, smart menu moves like the tenders, and these incredibly strong unit economics to power really ambitious growth.
And they're doing it even with those economic headwinds people are talking about. They're making their restaurants faster, the food easier to get via delivery, and the brand itself more visible and appealing.
Yeah, that's success. Driven by both the nuts and bolts of operational efficiency and the appeal of their flavor and menu. It says a lot about what modern consumers want from quick service, doesn't it?
It really does. Speed, consistency, but also that craveable flavor and smart innovation. It definitely makes you think, what other industries could learn from this? You know, what lessons in combining speed, consistency, and really targeted innovation could unlock growth elsewhere, even when times feel uncertain? What's the smart kitchen equivalent for, say, retail or even healthcare?
That's a really interesting thought. Where else can that blend of operational excellence and targeted customer appeal make a huge difference?
Definitely something to mull over. It's a fascinating case study of efficiency meeting and maybe even creating demand.
Couldn't agree more.
Well, that brings us to the end of this deep dive. A huge thank you for joining us. We really hope this gave you some valuable insights and plenty to chew on, maybe literally, if you're ordering Wingstop now.
Maybe.
Until next time, keep exploring, keep asking questions, and keep diving deep into whatever sparks your curiosity.